Welcome to the Business, Faith, and Family podcast. I believe there is one important aspect of life we oftentimes overlook and undervalue, which is simply the gift of becoming. As we are all at different stages and timetables of our lives, becoming better individuals, business owners, parents, friends, even better spouses should be our meaning for true success. Meanwhile, allowing our faith to keep us anchored while balancing it all is truly one of life's greatest gifts. And your journey to becoming more in tune to that gift starts right now on the Business, Faith, and Family Show with me, your BFF, Christina Harris. BFF Christina Harris on Business, Faith, and Family. I thank you guys for joining me on today's episode where we talk about stocks, financial security, and I have here with me in the studio, Mr. John Proctor. You want to say hi to everybody?
Hi, everyone. How is everyone today?
You want to tell us a little bit about yourself? How did you get into this?
How did I get into it? I was 17. I was a junior in high school, growing up in Overbrook Park. I used to hang out with a lot of friends that lived in Lower Merion across City Line Avenue. And just having friends, every time going out there, you know, the houses were better, bigger. The cars were much nicer. Just one day, just asking one of my friends, like, hey, what do you guys do different? He said his dad was to the stock market. And I just asked his dad, and the rest was history.
Wow.
Wow. Yeah.
So, and that started at 17. I often tell people how you have no idea how our upbringing and little seeds like that actually play a role in what we choose and who we become. Even for me not having stability as a child provoked me to own houses out of a passion and just wanting security for myself.
Right.
So to hear you say at 17, you got to see, and hey, that's the Lower Merion, that's
right.
The area where we all desire, to be. So how exactly so what did you do? Did you go to school for it? Did you just, what was your process?
He basically he took me under the wing. I did a lot of research on everything and just opened up my own little paper trading account. What they call was basically play money. And I remember when I turned 18, I had an after school job and I brought my first stock and made a little money, and I just kept doing it. Later on, soon went to New York on Wall Street to do it professionally. So,
wow, that's really impressive.
Yeah.
Most people who sit before me have a list of accolades. I went to the best school. I've had this and I have all that working. And to hear you say determination, the willingness to succeed got me to where I'm at right now. And I respect that. So explain to people, how does it work? I think one of the biggest misconceptions is a lack of knowledge.
Right.
So explain to us, how do it work? First of all, what's the name of your company?
The company I own and found is We Are Stock Traders.
Yes. And I follow you. I respect you. And I invited you here because I want everyone else I trust that you'll give us the right information we need. There are some listeners who are fearful.
Right.
There's some who's just not educated in this, and there's some who just need guidance. So I thank you for coming onto the show to give us all of that today. So explain to us, how does it work?
So how does the stock market work? Basically, what I tell my students, clients, the core value, the true root of the stock market. When we buy stocks, right, it's all based on future earnings expectation, right? What that means is when we buy stocks in different companies, we as an investor believe it's going to make us money in the future. So if you believe that Walmart or McDonald's will make you money, go out and buy their stock. You are a small shareholder of the company. So that's how it works. But on a side note, you got to open up what they call a brokerage account. Something with E-Trade, Robinhood, TD Ameritrade. Very easy, very simple. Takes about less than 10 minutes to do.
Oh, wow.
Once you do that, you're able to buy stock in different companies and become a small shareholder.
Wow.
Per ownership.
Wow. How now, for the person who work a 9 to 5 and they are given the opportunity to have a 401k and have people their employer match that usually is taken and invested into the stock market, correct? Right. How does that work as far as people what's the benefit of people knowing exactly what's going on with their 401k and communicating better with their financial advisor and things like that? I feel like a lot of people, they have it. It's one of those things that's like, all right, it's here. I'll never touch it, right? Or I may never see it until, But what's the importance of us not just being passive, but also educating ourselves on what's exactly going on? When I follow you, I get to see the trends. I get to see that Amazon is doing well and all those things. So it's important to, like you said earlier, have that mentorship, right. Have that person that you trust to kind of tell you where things are going.
Right. So with that, a lot of people do not focus on their 401k because, again, a lot of people don't know, right? So I guess because I'm in finance, I think it's important because at the end of the day, it's your money. The reason why I'm a little more aggressive, even though I don't focus on retirement, so to speak. But when I was a broker during the 2008 financial crisis, a lot of people that was due to retire around that time, they either couldn't or they took a substantial loss in their retirement. So I think, looking at your retirement plan, even if it's quarterly or annual, making the proper adjustments to everything will benefit you definitely in the future.
Great. And what's the benefits of just having a diverse portfolio, period?
The benefits, is a saying, you don't want to put your, eggs and all in one basket.
That's true.
So for me, dealing with individual stocks and commodities and other assets, I'm more the guy that make you money now, so to speak, versus later. So 401ks, IRAs, they're good, something that you need in retirement, but also have investments for now, because with stocks, you can pass them on to your kids, to your family members, things like that, and having stocks and asset that goes all toward your net worth.
You're so right. You said, and I quote, "The more money you make, the more money you spend. That's why more money doesn't make you rich. Assets make you rich." Explain that a little bit more.
So a lot of people think just because they make a certain dollar amount a year, they think they're rich. It's assets. So I broke down $100,000 a few months ago, and at the end of the day, you only have about $14,000, $15,000 a year to yourself. After, of course, taxes is taken out, after your monthly obligations, whether it's your mortgage, car note, student loans, etc. But the key is to build assets, not just keep hoarding cash on hand. And a lot of people don't know that. So for example, I had a client that had a lot of money and he wanted to buy him an apartment, and his credit wasn't good, no assets, and they denied him that apartment, even though he can afford to pay it for the 12 months, but they still denied him. But so he didn't understand the importance of things like that. So,
you said something that just is the core to everything I am. The name of the show is Business, Faith, and Family, simply because I had to go through a lot of failures. Okay. Just failing at business to understand what it really is all about. Right. And you hit it on the nail. It's not about how much money you make. As a business consultant, I get people who's like, I want to be like you. I want to be able to retire at 28, and they want to make money. They're just like, I want to, and I'm fine with that. But for me, I want to change the dynamic of our thinking and our process and therefore our doing. I want us to create wealth that when we make money, we know how to keep it, sustain it, right. And have it build for not just us for now. Like I have children. A lot of people have, probably have children. So how do we create something that they too can feed off from the previous generations?
Right. So little things like that. So a lot of people come to me, they think you need a lot of money to invest. Of course, the more money you have, the more helpful it would be to make a lot of money. But you don't really necessarily need to have a lot of money. So I have people that literally takes $100 a month, put it into the market, and every time they get paid, they're adding more and more money over time. So next thing you know, over a year, 2 years time, they have this one big lump sum of money in the market. Now, far as creating generational wealth, doing a strategy like that in the stock market, and another strategy which a lot of people sleep on is cash value life insurance. Cash value life insurance is one of the most powerful financial tool that's out there.
Okay.
In cash value life insurance, it's normally guaranteed. As long as you pay your premium, the money is guaranteed. It's tax-free. And I tell all my students, the fastest, most cost-efficient way to leave an inheritance or that generational wealth is an insurance policy.
You're right.
It could be a term life insurance for 20, 30 years, $300,000-$400,000. You're paying like $30-$40. The day you leave God's green earth, your family, your kids will inherit that lump sum of money, and it's tax-free. So for those that can't afford to invest or have a lot going on, I tell them, get a small term life insurance policy, and that right there, you just ended that poverty wealth gap.
You said it.
So
you said it. I know for myself, and you're right. I have term policies for $500,000 at a time. I don't know how much I got, but I say that to say there are term policies that $30-$40 a month.
Right.
We eat that in a day, realistically. You know what I mean? Lunch, you know? And I think it's worthwhile, and I think it's just a great thing to do. What would you say is one of the biggest misconceptions about the stock market?
One of the biggest misconceptions, so I go over a lot of myths when I teach my class. They say the stock market is just like gambling, right? They compare it to the big casinos for whatever reason. The reason being is because both involves money and both involves the element of chance. In the stock market, which I show people, the odds can be more in your favor. So you can take advantage of trends, supply and demand, and market direction. So once I show people these steps, they're a little more confident in taking the next step. And I tell my clients, the reason why the market is doing so well is because of consumer confidence. People have confidence in the market, and they get educated, and they go to the next step, and they act.
You said it. You said it. This is awesome. You know, you quoted something. You said, never take financial advice.
Yes.
From someone you wouldn't trade places with.
Yes. Wow. So that one I learned in New York when I was on Wall Street. You know, being on New York. So we cater to high-end network individuals.
Okay.
In order for me to be a broker, you need a minimum $250,000. So we kind of was talking to people that was making $5, $10, $20, $30, $40, $50 million a year. So when you're making that type of money, money talk is a little different.
Yes, it does.
One thing I learned that stuck with me ever since I departed from New York was the poor and middle class takes advice from the poor and middle class. And at the end of the day, you get poor and middle class results. Because I'm in the industry and I don't throw any hatred or shade on anyone, I've seen a lot of people that join the industry and they given this financial advice and they don't have financial freedom themselves. So it's just a little weird to me.
Yeah.
And when I go to different events, they talk about budgeting, credit, and savings. That's great, but you go to a country club with those wealthy individuals, they're not talking about that. It's just so different.
Yes, right.
Mutual funds, 401ks, things like that, CDs. That's a middle class product. A lot of people don't understand that. So again, you go to these wealthy individuals, they're not talking about that. So I think it's the reason why I brought that up, because I'm seeing too many people giving advice and they're like not on they're either on the same level or below. So it's, yeah. So, but again, I didn't, no one took offense to it or anything like that, but I see a lot of people join the industry as finance guys, and yeah.
I totally understand what you're saying, and it just goes back to basic principle.
Right.
You have to look at the fruit on people's tree.
Right.
We're in a society where people can brand themselves as anything.
Right.
You got the right lingo and some form of knowledge in it. You can brand yourself as anything, but only wisdom teaches you to look for fruit on people's tree. What are you doing with the same advice that you're standing before me and teaching, kind of thing, you know? Right. So I totally understand what you mean when you say that. Now, I want to talk about the fear of investing, because there is an underlying fear there. We often say there are some people who equate like invested into the stock market or just financial advisors when we see people like a Bernie Madoff or something like that, you know, realistically. So then we're like, see, that's why we can't trust that. And it's like another, but I want to clear that up because I don't want us to stay hinged on one person's, you know, or a few bad apples that spoil a product or something that could be beneficial.
Right.
So how do we get over that fear or just become more wise in how we approach or who we consider our financial advisors?
Self-knowledge, getting educated on yourself, on the different asset class that you're interested in, and just talking to an advisor that has a good track record.
There you go.
Yes. Talking to someone coming into the industry, I mean, they have little less experience. I joke around with all my friends that's advisors. I believe if you wasn't around during the 2000 financial crisis, you don't have experience.
How about that?
Because right now, a lot of people join the industry and we're in what they call a bull market, a good market. 2008, that's when everything hit the fan. So if you don't have the knowledge and the proper ways to make adjustments, I don't think, my personal opinion, you're not excellent advisor. That's just my personal opinion. But the Bernie Madoff, that was unfortunate. What he did was he took his client's money and he didn't invest it. He took his client's money and put it in his JP Morgan bank account. So, for an example, if I was a client A, I would give him $5 million. Client B would come in and give him $12 million. I call up client A and say, I just made you $2 million. So he was paying people off with the next man.
Wow.
So that's how his returns were so great and so consistent. So stories like that, especially Wolf on Wall Street, the movie.
Yeah, great movie.
The Main Street looked up to him as like, wow, he's rich. He did something amazing. But people that's in the industry, he defrauded his investors.
Yeah.
So little things like that, it can make people nervous, especially so in the public's eye. Yeah. But again, that's something you have to just keep moving forward. Again, get self-educated on what you're trying to do. And a lot of these things you can do it yourself.
How about that?
You can call Vanguard or you can call New York Life and enroll in the product yourself. You know, so you don't really need an advisor once you get the same information he has.
You're so right.
So
I think about the reality of people's heart too when they're investing. If you don't invest all your life and you get into your 40s, 50s, now you have an extra sense of urgency to make some money. So now you become more prone to Ponzi schemes and things like that. When people like you and I both know that wealth is something generated really over a long period of time. You know, now there are some people who hit the lottery and really come into this big inflation of income, you know. But for the most part, we understand that be careful of people who, you know, create this mirage that, you know, like you said, hey, I made you $2 million in your investment that quick, you know. So I just want people to understand, don't get away from common sense neither.
Right.
No matter how much the numbers look good and things like that. And I understand common sense can't be measured, but look at that too. When you're, just talking to people and trying to get to where you need to be. Why is it so important for our generation, the millennials or people younger, to start investing now?
So it's very important, but unfortunately a lot of them don't because they don't know. But it's very important because the younger you start, the more you can potentially have as you get older. And I remember reading a report from the Fed, which is the Federal Reserves, was like more than like 50% of Americans don't have like emergency savings, or they don't have like $2,000 to their name in emergency savings, right? So it's very important. The younger you are, the less you can start off with, versus you coming into my office, you're 48 wanting to invest or set up a retirement. You're gonna have to put way more money up. If somebody young can sustain the markets more than someone older.
That's right.
If you're 25 or 28 and we go through another crash, you can sit around, versus someone that's 48, 49. They invest 2 years later and now it's a crash because you're more approaching retirement at that age. So if a lot of millennials took action and put it in, I guess, in the school systems, things would be a little more different.
You're so right.
But that's just how it is. But I explained to my students, there's 3 ways to achieve wealth: stocks and bonds, real estate, and owning a business. If you're not in at least 2 or 3 of those asset categories, chances are you may not achieve that wealth, right? And people say, John, the information you give, whether it's in person, in the class, or social media, they don't put this in schools, right? But what people don't understand from an economic standpoint, it may seem harsh, but we live in a land of capitalism, right? What people don't understand, poor people, low-income people, whatever you want to call it, are needed in a capitalist society. In order for there to be an upper class, you need a middle class. In order to be a middle class, you need a lower class. So there's always have to be someone lower than you economically to provide those goods and services associated with the middle and upper class. So that's how it works. Federal Reserves, they raise and lower interest rates. When they lower interest rates, they increase in the money supply. When they raise it, they're decreasing the money supply. When you put more money in people's pockets, it encourages them to spend, right? Supply and demand kicks in and prices for goods and services go up. So our bills get more expensive. So this is where you have to have that price stability comes in that.
Yes.
So this country wasn't designed for everyone to live the American dream. So this is why you see going to the better schools, the private schools, they have that education versus inner city schools, because poor people always need it in a capitalist society. So once people understand that, and once they make that decision to be on the other side of the playing field, things are a little more noticing. Things are a little more like, wow, I really get this whole money game, so to speak. So once people understand that, finance and economics is like, it's wild. Yeah. It's very important.
You're so right. One thing you said too was, especially for us millennials, time is actually your greatest weapon at that point. And I believe that I purchased my first house at 18.
Nice.
Everybody was like, you can't do that. It was against the norm, you know? No, you go off, you create a bunch of debt in college, you go do all that,
Right.
But what it taught me was what you said. When you're young and you start to invest, whether that be in a business, real estate, stocks, you don't have all the typical pressures. Like you said, when you're 48, by this time the guy's coming in your office, he probably got children, a mortgage, car note, things like that. And you're so right. The ways that you really become successful, open up a business, invest in real estate, stocks. And I've learned the more that but it takes a certain amount of ambition and sacrifice. Mm-hmm. Because it's easy to get caught up and want more. Who wouldn't want the bigger house, the nicer car, and things like that? But I say, for me, it took experiencing all of that, having it all taken away, to better appreciate every dime and seed I now get in my hand. Right. So I know now it comes with a higher level to educate oneself. Mm-hmm. And you're right, we will educate ourselves on tutorials, how to apply makeup, right? We'll do all this stuff that don't make us any money, don't teach us wealth or the knowledge thereof. But getting a great mentor like you, and investing with a company like yours that knows what they're doing, have a heart and passion for the people. And like you said, that recession back in 2008, ironically, I had a business, I had a beauty salon. Mm-hmm. I made more money in a recession than when the years I wasn't. And I couldn't understand that for the life of me. But I say that to say this. When we have a diverse portfolio and things like that, I truly believe that it's important to put your family first and create things like that will produce a fruit. Right. And a lot of it is, we live in a world that's not going to be perfect. We get it. But at the same time, it's also our job to kind of steward over, the money we do get. Being knowledgeable, don't be passive, like you said, in your 401k. And continue just reading up and be around people where you see how their lives are turning out with the information that they're providing to you. Right. What are some other takeaways that you would like to, leave us with? So for those that, want to get to that next milestone in life, I normally tell people, hang out with people that's already there. You always want to level up. You can't hang out with, I say, if you can't build with them, don't chill with them. That's good.
Go to places where you can possibly meet these decision makers or whatever you want to call it. So from a personal example, I suck in golf, but I go to country clubs and have memberships because the people, the members there are that next level versus me going the middle of North Philly. So the doors are more open there. They can take you to the next level. And everybody got money. And when you're around people like that, it motivates you and encourages you to level up. So I have no choice when I'm in there. So I always tell people, look for people that can take you to the next level. And it doesn't hurt to ask or have a mentor or anything like that. Because let me tell you something, these wealthy people on Wall Street, they pay. One thing I know they keep on their side is their tax advisor, their financial advisor, and their legal advisor.
How about that?
And they pay a lot of money for it.
Exactly.
And they are willing and ready on call whenever. So it's nothing wrong with seeking advice for someone. So that's my little tips that I can give.
You're so right. You're so right. So where can people follow you at?
So on social media, John Proctor. I am on Instagram. We are stock traders. Our John Proctor. Do have a website. We are stock traders as well. And I do have seminars. Next seminar is actually tomorrow.
Okay.
We're doing stocks versus ETFs at 6:30 at my office, which is on Washington Avenue. But yeah, so we normally have bi-weekly seminars just to get people motivated, engaged, and keep them informed of different financial global markets.
Great. And you said there's pretty much no minimum of just coming into things, or very little, I'll say.
Yes. So, for an example, my seminars are free. So that right there should encourage people.
Exactly.
But for those that don't have that lump sum of money, I'm normally seeing people take a few $100. They get paid, let's say on a Friday, they got $100-$200 to spare. They go out and buy that stock, right? 2 weeks later, you got another $100-$200 to spare. They go out and buy the same stock. So they're accumulating their positions over time. So it doesn't take a lot of money to start. Once you in that building mode, you're going to see, wow, I have a lump sum of money in my investment. So that's a myth out there for those that are wondering about the stock market. You don't need a lot of money to start.
Yes, you're so right. That's awesome. That's awesome. And actually, I think people appreciate when they start small and they get to see it grow.